Welcome back. You're still with us on Startup Street. After 3 consecutive quarters of raising over $10 billion, total funding in the startup ecosystem fell 40% in the second quarter of this financial year. Now, this calendar year, this according to a report by PwC, a global slowdown, decrease in tech stock valuations, inflation and geopolitical instability were the key reasons for this fall in investment. Now, is the funding winter here to stay? Will we see startups opting for more debt investments? Joining us now to discuss this and more are Ishpreet Singh Gandhi, the managing partner at Stride Ventures, and Rahul Chanda, the co-founder and MD at Arkham Ventures. Arkham Ventures, which closed its first fund earlier this year, has assets under management of over 840 crore rupees, while Stride Venture Partners has sanctioned over 2,000 crore rupees in over 100 companies. Gentlemen, thank you so much for joining me on the show today. Rahul, let me start with you. Now, amid this global slowdown, we've seen startup funding hit a 2-year low as per that PwC report. In fact, only 2 Indian startups turned unicorn between July to September. Do you expect this slowdown in funding to continue? How do you view the investment environment going forward for startups?
Hey, happy Diwali, Arundhati.
Happy Diwali to you as well. Also
in the venture world, we are hoping that the lights are going to stay up longer for more startups than before. As you said, it's a funding winter. Winters don't last forever unless there is a nuclear fallout. So our expectation is that this is temporary. We are also coming from a very, very high point in the funding. It was not just India, it was global. Even countries like Ghana have received record capital. So it's just a flow of capital that was unprecedented. Anything that will be compared to that will always sound low, but from our estimate, the run rate of about $15 to $20 billion of annual investments in India is a good match for the demand that's out there. There is significant demand for startup capital in India. And what we are expecting is that the dry powder that is on the sidelines is going to start resurfacing. Once there is more clarity on the existing health of the portfolio that's been created in the past, that's been funded in the past, a lot of investors are waiting and watching to see what the going forward valuation expectation is going to look like, if the burn rate has been managed well or not. And based on some of the clarity that's going to come out, our expectation is that there'll be a resumption of a flow, which will be more in the $15 to $20 billion run rate.
All right, so we will see a resumption of flow over there, and the dry powder that's on the sidelines will come back in. Now, Ishpreet, let me come to you. 2021 was one of the most active years when it came to venture debt investments, and it has only been rising. So how has 2022 been for venture debt? Do you see startups opting for more venture debt going forward? What's making venture debt more attractive at this point?
Yeah, sure. First of all warm wishes for the festive season, and
absolutely, same to you as well.
Arundhati, it's always a pleasure to be on Startup Street. Overall, the numbers have been quite interesting for us. We'd spoken at Stride Ventures, we'd spoken about some numbers last year in terms of what it came out. And this year has been, what we projected was $1 billion plus industry this year in India for venture debt. And we are seeing that getting crossed in the next couple of months easily. In terms of the demand, I think we've seen an unprecedented demand because of the fact that, as you rightly mentioned, that the equity infusion has got slowed over a period of time. However, we do see spikes of equity coming in the companies depending on the business model and the kind of valuations they are at. For example, ProCap, one of the companies which you just covered earlier in the episode, is one of Stride's companies, and they've been a part of venture debt portfolio. We always believe that good companies, because of the overall scenarios, what we are going through in India, and being outpaced versus the global peers, we would see equity infusions with the dry powder getting materialized in some manner. But demand for the asset class has really picked up. So we've seen close to 1,000 crores of requirements in the last month standalone, and we've disbursed close to 250 crores a month, which is quite high as per our normal run rates. And we project this happening. We project this happening for the next couple of quarters for sure. To what extent, to what levels it can go will be interesting to observe. The trend, which largely has got changed in the last quarter, we were talking about more of mid-stage companies really coming across and asking for requirements alongside equity or without equity rounds, depending on what state of scenarios they are in. We started seeing late-stage demand as well. So if you see the public listed corrections, it started coming markets as well. And that has resulted into late-stage companies coming and asking for higher checks for venture debt.
Right. So you're seeing late-stage companies also asking for venture debt, and you're seeing demand rise, especially right now. But Ishpreet, what are the sectors that you're betting big on, and which sectors do you see seeking venture debt the most? If you could quickly tell us that.
Sure. So Arundhati, if you just break down the requirements, since at Stride, we've always believed in reimagining the capital for startups. Generally, capital requirements are coming in the form of wherever you have to unlock working capital or growth, right? The growth capital either can be funded through equity or debt. And all the consumer, commerce, logistics, financial services, lending-enabled businesses have seen various requirements. We've also seen consolidation within the industry, right? So you've seen larger players trying to acquire companies which they find as a right value in today's time. And that also results into acquisition financing. So a combination of working capital and acquisition financing has largely been in those sectors alongside healthcare.
All right. Okay.
So those sectors has been in quite demand overall.
All right. Rahul, if I could come back to you, you announced the close of your maiden fund earlier this year. Take us through how much of the fund you've already deployed, when will you finish deploying most of these funds, and how many startups have you invested in? You're also betting big on India's middle India market. So take us through what kind of demand you're seeing over there. What are the kind of companies you're investing in?
Sure. So we closed about 790 crores beginning of the year. We have been investing those since 2020. So we've had three very clear years of deploying. We followed a very measured pace of investing in 6 to 7 companies a year. We've had a lot to choose from because there is just an amazing supply of very high quality startup out there. We are currently, we have dry powder of about 40%. So we have room to keep investing for another year or so. At sometime next year, we'll start thinking about our next fund. We've had a good run so far. We've had 15 investments, out of which some are looking already at a stage where we are very comfortable with the business model. They're scaling quite well. Across our portfolio, there has been a very strong attention to making sure that there is 24 plus months of runway. And most companies have actually raised capital successfully in this environment. So there is a tremendous amount of dry powder within the companies. We have also seen, as you asked me about Middle India. Middle India for us is a market where the household income is between 5 to 20 lakhs. There is tremendous demand for actual services which are designed for that Middle India consumer. There is gaps in consumption that have been structural. The old design of industries have not been able to cater to hundreds of millions of new consumers in India that are coming about, as we see, because of their access to technology rails that public infrastructure has built. So we are seeing during COVID, last 2 years, the highest degree of digitization and adoption has happened in Middle India. So there is tremendous amount of consumption of digital services that we're seeing now. So we're seeing some amazing growth coming from that market.
All right, Ishpreet, Rahul, we're completely out of time. Thank you so much for joining us on the show, and we wish you all the best going forward, and a happy Diwali to all of you.
Same to you. Bye-bye.
All right, moving to our checking in segment. With the tweak of the golden visa rules, Dubai has seen an unprecedented spike in real estate demand in July 2022. The total real estate sales transactions jumped to 61.7% on a yearly basis and touched 20.8 billion dirhams. Indians are on top of the list in terms of buying homes and office space in Dubai. My colleague Aishwarya Anand caught up with Haspi's head of real estate, Azam Fakouri, to understand the home buying opportunity in Dubai on the sidelines of GTEX Global 2022. Now, the startup is one of the leading players in the PropTech space in UAE. In June, they announced one of MENA's largest Series A fundraising rounds. Here's a slice of that conversation. Listen in.
We launched 2 years ago to improve the home buying journey for everyone involved. So we work with the agents, the mortgage consultants, and home buyers locally and globally. And the way we do it is we aim to be a one-stop shop to allow customers to search and find their house, find the financing and secure it through the list of lenders that we have, and ultimately close on the deal. How do we do that? We have built technologies and products in-house to make sure that the bureaucratic, full of hassle experience is better, faster, and to make sure we're offering the best interest rates and the lowest cost for our customers.
Now, you've also recently launched a marketplace to complement your mortgage products, right? So could you elaborate on the service a little bit?
If you look at real estate in general, it is the largest asset class globally, yet remains very undisrupted. And what we aim to do with what we're launching is make sure we are changing the way people buy and finance their houses. Our properties that are growing on the platform month on month are verified, making sure that the customers have a good experience in searching, finding, and viewing these properties. This, in combination with our mortgage business unit, makes sure that the customers have a single point of contact and a faster and cheaper experience when they're buying their home through our platform.
All right. Now, while you're Dubai-based, this year you expanded to Spain as well. So, and this has happened post raising the $37 million Series A round from Sequoia, which is touted to be one of the largest rounds for this stage in the UAE market, right? So, I wanted to understand that where have you deployed that capital, and what is in the pipeline for the company?
Spain represents a very exciting opportunity for us because of the growth potential of the market. We look to address big markets, and we are one of the very few startups that have expanded from the UAE to Europe. Between the UAE and Spain, we're looking at a market size of $400 billion that we're solving for. And we are very lucky and fortunate, as you said, to have the backing of global investors, including Sequoia Capital India, but also to be the first investments of Founders Fund and Fifth Wall in the region. And we're looking to deploy the capital to increase our headcount, to hire and attract the best talent, but also double down on developing and innovating the technologies to make sure that the process is improving, and eyeing opportunities to expand across Europe.
And any plans of entering India?
India actually Indians in general remains one of the top home buyers in Dubai over the years. So if you look at the past 5 to 6 years, Indians have bought properties north of 80 billion dirhams and remain to be one of the top nationalities. And our platform is very well positioned to help Indians and other nationalities outside the UAE to buy and finance their homes in Dubai.
All right. So that brings me to the next question. You know, with Dubai's property sector continuing to experience an exponential growth, including $6.6 billion of sales in August 2022. Take us through what kind of earnings you're projecting, what is your top and the bottom line, and what's the opportunity for, what's the home buying opportunity in the Middle East?
Currently, we are doing over $2 billion in annualized GMV. Our real estate business unit is less than 1 year old, but we are still growing 25% month on month. So our growth has been in line with the market and has been the fastest growing startup. And Dubai has always attracted home buyers globally, right? We don't see any signs of demand slowing down. And we think it's a very good time for investors looking to increase their exposure and portfolio with high ROI properties, but also of home buyers looking to jump in the property ladder. And this is why we look to assist both customers in making sure they go through this process in a very easy way while reducing their costs of financing and purchasing the property.
All right. Now, you know, it's a very interesting feat that you were recognized by LinkedIn as one of UAE's top startups, which was based on your growth trajectory. So could you take us through what's your employment growth rate like, and what are your, what's the strategy that you take when it comes to hiring talent, and how's the whole ecosystem like at SP?
So we are a tech company, but we remain a people-first business, okay? We think people are at the core of what we do, and we put them at the core. And over the past year, we've managed to hire and attract talent and hire talent globally. We've recruited people from the biggest startups in the world, Loft and Quintandar in Brazil, but also Didi, and also recruited industry professionals from Microsoft and Uber to make sure we are developing the most innovative products. We have seen our team size grow 5 times in the past year, so we are currently over 300 people in the UAE and Spain.
Tritex is like, this is the hub for all tech companies to be coming here and showcasing their amazing work. I want to understand, what is the role the technology is going to play in the real estate market? What's the future like?
We strongly believe that real estate has been undisrupted for the longest time, unlike other industries, fintech and health tech, and it is ripe for revolutionizing it and changing the way things are done. We see a growing entry of different startups and proptechs trying to change the journey. and we're positioning ourselves to be category-defining business, solving for all the stakeholders involved, working with the different parties locally and globally. And we've seen those trends continue with demand showing no signs of slowing down for home buyers.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.